All right, what do you make of this? Slight upticks in PCE. What does that mean potentially for the Fed? The idea that while inflation has certainly moderated over the last couple of years, it seems to be kind of sticky above 2%.
Yeah, I do think we're going to see a fairly benign print today, somewhere in the mid-teens with regards to basis points on the month-on-month gain. As far as what it means for the Fed, Powell had his testimony in front of Congress just this past week, and he had to defend the lack of Fed cuts. And I think based on backward-looking data, there's a pretty strong case to be made that the Fed should already be cutting and cutting with alacrity. But policy has to be forward-looking, and we still have this huge rolling thread of tariffs. And if the president is promising a 50% effective tariff increase, policymakers need to proceed with caution. And that's just what the Fed is doing. They don't have a great model to deal with a shock of this size. So until we get some sort of clarity on trade policy and assurances that longer-run inflation expectations are well anchored, I think the Fed is going to be comfortable doing nothing just as long as the labor data remains okay.
All right, so you think it's going to be benign, but I want to ask you, whether it's Fed minutes or reports like the ISM, you continue to see this commentary that manufacturers and other companies, they're increasing prices in anticipation of tariffs, but we have seen considerable pauses and reductions when it comes to China and other countries. Do you think that the anticipation of tariffs is going to be reflected in this PCE and other forward reports? And what about the idea of trade deals? Do you think that people hold back on increasing prices with the idea that, hey, there might be a deal and those tariffs might not be in place?
It's a great question, and I don't think that we're going to see the tariffs bite in this print. But retailers have been preparing for these tariffs by overstocking inventories, and these businesses have pretty slim margins, and those inventories are eventually going to be run down, and businesses are going to need to restock at higher prices, and these costs are eventually going to be passed along to the consumer. So I think today's print is encouraging, but I think it's probably the lowest inflation print that we're going to see over the next few months. As far as trade deals are concerned, we're not going to see any durable, comprehensive trade deals. I think more likely what we're going to see is a trade truce with a bunch of countries. So I don't know that this necessarily improves things, but it does take the left tail risk off of the table, but I don't think it's going to be a tailwind to growth.